Welcome to Morningstar. I'm Holly Black. With me is Libby Bernick. She's Head of Sustainability for Morningstar. Hello.
Hi, Holly. Great to be with you today.
Thanks for joining us. So, you are Head of Sustainability. As an investor, why do you think I should care about ESG and sustainability?
There's two reasons that investors should care about ESG and sustainability. The first is that all investments have some sort of impact, and investors have the right to know what are those impacts, and they also have an opportunity to reflect your preferences and shape the impact associated with your portfolio and shape the impact that that portfolio has on society and the world. So that's one reason. And the second reason is that we know increasingly that these ESG or environmental, social, and governance factors are financially material. And just like any other risk, these ESG factors should be considered by investors as they would consider any other risk. So these factors could affect the long-term sustainability and success of those investments.
And obviously, it's quite a subjective way to invest because it's about our own beliefs and the things that are important to us. But how does Morningstar think about ESG factors and sustainable investing?
Mm-hmm. Well, Morningstar's mission is to empower investor success. And ESG factors and sustainable investing are just integral to that mission. I mean, Morningstar has always embraced a long-term investment philosophy. And it's increasingly clear that companies' long-term profitability is consistent with a business model that leads to community well-being, engaged employees, and shared values with customers. We're also taking a very integrated and what I would call bottom-up approach to incorporating those ESG factors into our methodologies, whether it's credit analysis, manager research, equity research, quant research. We're looking at how to build those ESG factors and understand those risks through those methodologies. And then the final way that we're looking at ESG is really to embed these factors into investor workflows. So we want an investor to be able to research ESG and understand what it means, and then understand what their preferences might be. How do they care about ESG factors, or are they more focused on other aspects of their investments? And then we want them to be able to select investments or screen their portfolio and then report on that sustainable performance right alongside financial performance.
Well, that is the great thing. When you get down into it, you can really drill down into the things that are important to you. So that's factors, whether it's carbon risk or energy solutions for the future. So what are some of the ways that Morningstar evaluates those ESG factors?
Well, Holly, it's just as you described. We're looking at some what I would call thematic issues like climate or diversity, for example, or executive pay. But we're also looking at ESG risks and considerations sort of along what I would call a spectrum. We think about ESG risk, and we also think about impact. And increasingly, we're also looking at the engagement of asset managers, so risk, impact, and engagement. So, for example, when we think about ESG risks, we have our globe ratings of funds, and that allows us to understand which funds and the underlying holdings are more sustainable and have less risk. We also have data that allows investors to understand whether they want to avoid certain controversial business activities, or if they want to amplify their investments in business activities that are creating positive impact for the environment. And then the final way, as I mentioned, is that we are looking at ways that asset managers act as good stewards of our investment. So how are they engaging with the companies that they invest in, and how are they voting on their proxy records?
Libby, thank you so much for your time. For Morningstar, I'm Holly Black.